Hey traders, so in this video, I'm revealing the best way to use the RSI indicator. So first of all, as traders, it is very important that we can identify key levels on the market where prices are more likely to switch directions. These key levels can be detected if we know when the market is at a relatively high or low price. And the RSI does a very good job of doing that. And in this video, I'm revealing the best strategies that we can use with the RSI indicator. Before we continue, if you have any suggestions for future videos or just questions about trading in general, feel free to leave them in the comments below. I'm still a small channel, so I'll still have time to read and reply to all of the comments. So without further ado, let's get on with the video. So, if you open the RSI indicator, it displays a single line and 2 points, the 70 and the 30 point. If the RSI is above the 70 point, meaning the market is considered overbought, and if the RSI is below the 30 point, meaning the market is considered oversold. So, a common misconception that so many traders make is they think that when the RSI hits oversold, the market will automatically reverse upwards. And when the RSI hits overbought, the market will automatically reverse downwards. Well, this is actually a good way of using the RSI indicator if you want to burn your money away, because it simply does not work. You see, the flaw of the RSI indicator is that you cannot simply follow the overbought and oversold strategy with all market conditions. If the market is on a strong trend, the RSI will display so many false signals. Here's an example. You can see that the price is clearly on an uptrend, and the RSI indicator is at the overbought levels. So if you took a sell position here hoping for a reversal, let's see what happens. The price instead pushes further to the upside, and the RSI went to overbought levels again. So just because the price is overbought doesn't mean it's going to reverse down to oversold. Prices can stay at overbought and oversold levels for long periods of time. So, instead of making the RSI as your main indicator, you would instead want to make it a supporting indicator. You want the RSI to further confirm your analysis. And my favorite type of analysis when combining with the RSI indicator is just simple support resistance and trend lines. For example, an RSI that signals oversold levels alone can lead to false signals. But if the RSI is at the oversold levels while being in a major support line, it's a much more accurate signal. So let's jump into a chart. Here, you can see that the price is clearly on a downwards movement. You can draw a trend line here as price is rejected multiple times. You can also draw another trend line below here. A little tip when drawing support resistance line that I personally use is that prices needs to reject at least 3 times to further confirm that it's a strong support or resistance. So now, the price is back at the lower trend line after it rejected multiple times. And we can also see a strong price rejection while the RSI is at the oversold levels. So this could be a good buying opportunity. So here's another example. In this chart, you can see a clear support line. Now, as the price hits the support line and the RSI is at the oversold level, the price reverses back up every time. We can actually see this happening 2 times already. The price hits and reverse, hits and reverse. Now, we can see the pattern starts forming again. The price is at the support line and the RSI is at oversold, signaling that the price will likely reverse to the upside. So this is also a good buying opportunity here. Another way to utilize the RSI indicator is with divergences. A divergence is when the price of an asset is moving in the opposite direction of the RSI. For example, normally when the price of a stock is forming higher highs, the RSI will also form higher highs. And if it's forming lower lows, the RSI will also form lower lows. But there are times where the price is forming higher highs, but the RSI forms lower lows instead. So this is called a divergence. And I understand that finding a divergence with the naked eye is very hard. That is why I use an indicator on TradingView called CSRS. So this indicator will help you a lot because it can reveal when a divergence happens. This will make your job 10 times easier. There are two types of divergences, a bullish and a bearish divergence. So a bullish divergence is when the price is forming lower lows but the RSI is forming higher highs instead. This signals that the price is going to reverse to the bullish side. A bearish divergence, however, is the opposite. When the price is forming higher highs but the RSI does not agree with the direction of the price and instead forms lower lows, this signals that the price is going to reverse to the bearish side. So, just like when using the RSI indicator normally, you cannot just buy or sell if a divergence happened. You need a second confirmation. In this case, I'm also using support resistance and trend lines for my second confirmation. So let's jump into a chart. As we can see, Shopify was heading on a downwards direction while the price rejects this key level of resistance multiple times. So we can put a trend line here. And the RSI displays a bullish divergence, followed by a big green candle that broke out of the trend line. So this will be a good buy opportunity. So let's look at another example. You can see that the price is on a clear uptrend. So you can draw a trend line here as it rejects multiple support levels. Then you see a bearish divergence forming, as RSI is displaying lower lows yet prices are heading towards higher highs. Next, you can see that the price broke out of the trend line and a huge bearish candle was formed. So this is a good sell opportunity. Another way of utilizing the RSI is by using the 50-point line. So the default settings in the RSI are 70 and 30. So you actually want to change this into 50 and just disable the other ones. So now we have a middle line in the RSI. So in this strategy, we are actually using the RSI for a trend indicator instead of a reversal indicator. How this works is that if the RSI crosses above the 50-point line, it means that it's a bullish signal. And if the RSI crosses below the 50-point line, it means that it's a bearish signal. But again, we would also need a second confirmation indicator to further support our analysis. In this case, I'm combining it with the stochastics indicator. So let's jump into the examples. Here, you can see that the RSI crosses above the 50-point line while the stochastics is at the oversold levels. So this is a good opportunity to buy. So let's look at a few more examples. Here, the RSI crosses below the 50-point line and the stochastics is at the overbought levels. So this is a good opportunity to sell as the price reverses. So I just revealed to you the best strategies that you can use with the RSI indicator that you can implement right now. And I would like to ask a very small favor of liking the video and subscribe to the channel. It literally takes only 2 clicks, but it means a lot to me. So thank you guys for watching and I'll see you in the next video.